Hey everybody, welcome back to Ryan Makes Sense. Over the weekend, I was looking at YouTube. James Johnny came up. If you guys don't know who that is, he reviewed GameStop and the cult-like following that the stock has attracted since the huge run-up back in January of 2021. There are still people to this day who love GameStop, continue to buy it, and will never sell a share unless it has the MOAS, the mother of all short squeezes. In today's video, I just want to find GameStop number two. The way we're going to do that is a couple different ways, but we have to really think about what caused the GameStop euphoria back in 2021. It was a culmination of a few things. Number one, hedge funds, mutual fund, institutions, large money was naked shorting. So you have the group of people who want to look at shorts, look at where potentially big money is naked short selling. And you have the other group who are like, who cares? I just want to get in stock from $4 to 320. And I'm kind of in the middle. I want to find a stock in this video, and I'll tell you how we're going to do it. I want to find a stock that is shorted, has decent financial data points, and looks relatively healthy. Back in 2020, when we're looking at May of 2020, May 24th, 2020, about 6+ months before the meteoric run, we're looking at data points from then. And at that point in time, if GameStop were to shut their doors as of May 24th, 2020, their quick ratio is a 0.6, meaning anything under 1, they will not be able to pay off all of their debts, notes, loans, etc. So institutions and big money were basically thinking this was easy in the bag money, like GameStop is just going to be screwed. However, there was also another catalyst, which was Keith Gill, who posted about GameStop, got a bunch of people to rally behind him. It became a social movement, essentially, where it was people versus Wall Street. So we're gonna find something in between, but I'll show people. I'll do a quick scan for people that are really into potentially finding naked short squeezes, but then we're gonna deviate back to just kind of creating a well-rounded picture and going from there. So without further ado, we're gonna go ahead and hit the subscribe button. We're gonna shrink my head. We're going to get ready because this is gonna be a fun one. So what we have here, this is GameStop's financial data points as of May 24th, 2020. The price was $4.18. All of this is great. We're going to use this in a little bit to create a scanner to potentially find similar companies. What we have here, this is financial data points. Again, the income statement, balance sheet, cash flow. We're going to pull some metrics from January 31st, 2021, when GameStop had their rise. And we're settling on this date because if I hover right here, you can see this big, huge green candle. If I hover one candle over, that is December 2020. December 2020, the closing price of GameStop was $4.71. Move over to January 2021, the closing price was $81.25. But the stock got as high as $120. So yeah, that's why we're looking at 2021. And just for reference, I just want to show you guys, this is how we're kind of getting our data. So initial value, let's say a stock goes from $10 to $20, that's going to be a 100% rise. Correct? Yes, because it's a double. And I just want to show you guys because I don't want any confusion. 100% increase. So GameStop went from, we'll do $4.18, and we're going to do 320 conservatively. I think it got over 320 that day. So we're looking at a stock increase of 7,555% conservatively. That's pretty fantastic. So what are the first things we need to do? If you are kind of following me, you want to go to waybackwebsite.com. And you also want to open finviz.com in a new tab. You're going to type in GME. Sorry, I'm going to stay down here. type in GME and grab this URL and copy this and then paste it into the Wayback website machine.com and then remove the ampersand P equals M, period equals month. And when you do that, you will get all of these different, my head's in the way, that's okay. You're gonna get all these different timelines of when you can go back and look at the history of GameStop. So now that we have the medulla oblongata, the bread and butter, we have this. We're gonna keep this here. Let's go ahead and actually run my numbers on this. So what we're gonna do really quick before we move on, I do just wanna show you, where'd it go? Why GameStop was a potential value back in 2024. Although we've talked about a few different negative things about GameStop, these are the positives, and I really don't want to gloss over them because this is part of my typical analysis that I generally do. Okay. So normally I had a market cap, it's over 1 billion, GameStop is not. So income is negative 464,400,000. That's an extra zero. 464,400,000. Yep. Sales was 6,470,000,000. One extra zero. 6,470,000,000. Correct. Debt and cash. We do know that they were low on cash because their quick ratio was less than 1, and they did have some debt. However, when I go to look, the data is not down here. So what we're gonna have to do is essentially not include it here. Our shares outstanding is 65,600,000. Now this brings us to a stock price of $91.55. I remember when GameStop was around $3 and $4, and I ran the same numbers, and I was like, why is this stock price so disassociated with what I'm showing here? It just did not add up. And it goes to show that really this type of calculation, there's other videos where it's more in depth. We're just doing this because we're working with limited data. It goes to show that there is potential for companies. And this, I've used this for Digital Turbine, went from $1 to 100. Renasola, $1 to 30. AMD when it was $2. Signet Jewelers when it was like $5 and ran to 100. Was it 5? It was around 5 to 10 and it went all the way to 100. So when you run a similar calculation and you see a huge dislocation, think twice. That's all I want to say. We're also going to keep this here as well because we want to use this to create our scanner. We're now going to go to Finviz in a new tab, which is what we have here. And we're going to go to Screener. And the first thing I'm going to do, just to get it out of the way, if you are trying to find a stock that is potentially being naked shorted, you're going to go to finviz.com. You're going to go to the screener. You're going to click all right here, and I'm circling it, and then short float. And if you have the paid version, which I do, you can do custom over 90%. If you don't have the free version, you're probably going to do over 30%. And this is what we're going to do. We can see there are 49 stocks total that are being shorted. What we're going to do is go to settings. And if you can't find it like I can at the moment, we're going to do Control F, type in settings. We can't find it. We're going to go to custom right here. It's custom. Now we're going to go to settings right here. And now we want to get the column that has a short float. And if this is a little bit too much information for you guys, I definitely recommend going to finviz.com. They have a help section right here. It is absolutely incredible. This website will change your life. I guarantee it. So we're going to go to short float here. We've selected it. Now it's loaded. And now we can see the short float here. We also want, actually, we really don't care at this moment. So now that we have that, we can just click settings again. And now we can see the short float and the lowest shorted. Okay, so a stock is being shorted at 163%. Does that sound like it is a potential naked short? Yes, I think so. It's a four it's a $4 stock, kind of like GameStop was. Let's just take a look at it. 163% shorted. That's kind of wild, right? Okay. Let's see why. They make $3 million. They lose 13 million. That is a horrible equation if you're trying to think of a business that tries to make money. They do have really good gross margins. They're actually growing. Get this. 2023, they had 2.9 million in sales. 2024, they have 3.37 million trailing 12 months. So this company actually has, I'm not going to say it has a chance, but that's pretty insane. And that's also insane. 100 negative. The shares, there is only shares float. There's only 500,000 shares out there at a $4 stock. That is a, if someone comes in with $20 million cash, they're going to take this thing from $4 to the moon. What in the heck are these institutions thinking? I don't know. Um, Revenue on a quarterly basis. I mean, Q2 of 2024, they did 900,000. Q2 2023, they did 740,000. So that's an increase of 160,000. And they paid less money to make more. So I'm confused why this company, it seems like they're getting more efficient. They have good gross margins over the last 4 trailing 12 months, 45%, 50%, 43%, 35%. Ooh. The founder's last name is Ferrari. That's pretty cool. Okay. Um, this is wild. This is absolutely wild. EPS is -8. Let's see what the EPS is going to be on a amount the annual. No. 2023 -8. Ooh, so they're getting further away from earnings per share growth. I mean, what can you do? But I mean, their revenues are looking really good on a trailing 12-month basis. They've almost 10x'd their 2020 revenue. They went from 40,000 in revenue 2020 to 3.37 million trailing 12 months. So this company, not bad. We're going to see who's shorting this one the most. Who is behind? What's the big money behind this company? Okay, so this was just one example of looking at potential people who were in the GameStop and the GameStop, who were part of the movement and want to look for stocks that are naked shorted, potentially naked shorted. This could be one. Let's just do a Control F for short. Short. Where you at? Where you at? Doesn't look like it's any shorts are reported. 0 long/short. So you're telling me retail is shorting this out the wazoo? I don't think so. Institutional ownership 3%. Old data, new percent 119%. So this could be where institutions were shorting and then they purchased it back. We just really are not sure, but this is if I've ever seen a potentially naked shorted stock, this looks decent for the occasion. Looking at the bigger picture, the stock used to be $3,000. Now it's trading at 4-ish. So the company loves to do offerings, is what I'm gathering. I can see that here as well. Anyway, we're going off the path. That's how you look for naked short stocks potentially. So that's we're done with that. Okay, now we're gonna go back to our screener here. We're gonna drink some water where things load. We're gonna go to all. Okay. So some high level points we can pull from here. Short float was 99%. So what we're gonna do here is we'll do short float over 30%, which is kind of what we saw. There's only 49. Gross margins were 29%. So I'm just gonna do, there it is, gross margin over 25%. We're now down to 18 potential stocks right here. Okay, what can we gather? I mean, they made 6 billion. I don't know if that's an option. Let's see. Sales. Nope, that's not an option, unfortunately. Their quick ratio was ugly. They did have some debt. Their debt was under 1, so we're gonna just long-term debt to equity under 1. We'll track that. We're from 18 stocks down to 4. All right. Let's do a little bit more. Average volume, crazy. Do I want to include average volume? I kind of want to keep it where it's at, only because we're down to 4 stocks. I don't want to search for companies that were negative profits. I do want companies that are under 100 million though, shares outstanding. Under 100 million. Okay, 4 stocks down to probably 4 stocks, I'm guessing. Yep, okay. Something that's also important that we want to see. Earnings per share next year, they were guiding positive. So we're going to get that EPS growth next year positive. Still the 4 stocks. Okay, I mean, these are really important data points though. Forward PE, that is also important. So just a couple things to note here. Typically, when the forward PE is lower than the current PE, that means the stock is undervalued in the future. And that's based off of current revenues, EPS, margins, etc. So if GameStop in May of 2020 kept their same revenues, margins, EPS, etc., the stock would have been undervalued-ish. However, it was still a pretty gnarly company because their quick ratio is at a 0.6, pretty over leveraged. They did have some debt that they were not addressing at the time this snapshot was taken for GameStop. Okay, so I think we have really the core items we're looking for. Again, we're going back to 2021. I just want to see if there's anything I can glean off of this. Their operating margin was negative. It says their shares outstanding here were 261 million, but based on our snapshot, that's not accurate. Let's look at our balance sheet for 2021. Total assets did exceed total liabilities. So, I mean, although their quick ratio is horrible, the company really didn't seem like it was at a do or die moment, like I think hedge funds and institutions thought. Return on equity, current ratio. Their quick ratio for 2021 was 0.71. And then after the big run, you can see that they got really healthy with cash. So I think we've got the core. I think we've got the core items. So this is our GameStop. I'm gonna go ahead to the presets. I'm gonna save the screen as GameStop 2.0. 2.0. All right, let's save that. And now that we've saved it, we're gonna take a glance at these companies. We just looked at TNON, and that is a potential naked short, in my opinion. We do have a couple billion-dollar companies here that we're just gonna open everything. There's only 3 other stocks to look at. So while those load, I did do a search for stocks that spiked over 10,000%. Yep. And when you do this, depending on the level of effort you put into it, um, you're going to come up with different items. I asked Chat GPT as well, and it did give us some gems that, if you've watched my channel before, these are typically companies that I look for, companies that are early on, small, kind of risky, that potentially have the gusto, the leadership, the growth, the margins, the revenue, the profit to really, really explode. One that I really like, I'm not going to go into it, but I like ticker symbol KRT. You can do your own research on that one, but that one I think is beautiful. So really quickly, we're going to take a look at ticker symbol AAOI, Applied Optoelectronics. We like to look at the bigger picture. Beautiful volume. Gosh, imagine getting this down here when it was 250 and then I went to 23, 24. I mean, it looks like it's just getting started, honestly, and it looks like it's broken out of a wedge here. And just to illustrate, because I'm not sure if everyone is familiar with what a wedge is. All right, so we have the tippity top going down like right here. So we have a pretty clean breakout. I do have Thinkorswim as well. Let me pull that over. Red Rover, Red O Rover. Send a Thinkorswim on over. Whoops. AAOI, baby. What am I doing? Okay. I've charted this one before. And it looks like we're hitting some resistance in this channel. Sorry if it's lagging. We're hitting some resistance in this channel, but look at this monster volume here. This is not to be ignored. I think we are onto something here. And let's go ahead down here and take a peek. They are not profitable, barely. A lot of shorts. Let's go ahead and see what institutions are doing. AAOI. This is absolutely beautiful. This is going up and to the right. That is exactly what you want to see. The company's sales are actually falling. So look here, they did 217 million in 2023. As of 2024, they've done 206 million. Not as good as last year on a trailing 12-month basis at the moment. They did have some share dilution. They have 38 million shares outstanding. And then 2022, they had 28 million. So it looks like they raised, or they added almost 10 million shares to the flow. Gross margins, not horrible. Quick ratio, not horrible. Debt, 0.59, long-term debt, 0.43. So they're paying off their debt. I mean, this company does not seem... Okay, this is back to AAOI. They do have all-time high institutional ownership, which is crazy. So we're going to look at... We're on AAOI, and we're going to run the similar calculation now. So again, market cap is not over $1 billion. Income is negative 720,100,000. Sales are 206,940,000. Cash and debt. Cash. I think I may have left. I think I have to. There we go. It's negative 72 million, not negative 721 million. Okay, we want to go to quarterly. They have $16 million in cash. 16,120,000. Total debt 80,610,000. Okay. Total assets 348 million. Total liabilities 161 million. Assets dwarf liabilities 2-to-1, so that's fantastical. We do have some buying and selling here. No real red flags. I mean, if insiders were swing trading, that'd probably be different. And we're going to go ahead and divide this by shares outstanding of 38,150,000. So this stock should be $1.84. Did I mess something up? No, I did not. So this is a prime example where the stock is kind of the inverse of what we just saw with GameStop. It's trading at maybe 6 times or 7 times what it's actually potentially worth. However, you always want to know the trend is your friend until the end. And right now, honestly, the trend looks like it is with the bulls. So um, keep an eye on this one. But we're going to go ahead and just move on for the sake of the video. And now we're looking at MGP Ingredients. This is a winery, distillery. What do we got here? Okay. 2024, trailing 12 months, 787 million. 2023, they did 836 million. They are on a trailing 12-month basis. 2023 is looking a little bit better than 2024. Quick ratio is beautiful. They are profitable. They're being shorted quite a bit. Let's go down and take a peek. Quarterly. So what I wanted to do here is just see what the company did for Q1. So Q1 they did 170 million this year. Q1 last year they did 201 million, so they're down 30 million. Q2 they did 190 this year. Last year they did 209, so down 29 million. So the trend here is that 2023 was a lot better than 2024 as of now. I don't see a scenario where this ultimately gets legs and runs. However, I do want to call out the trend is your friend until the end, and we can see the momentum is curling. So it looks like it's getting ready for a move. We have our high, higher low, higher high, double top, higher low, again, low, low. So this could be getting ready to run potentially. Keep this one on your radar as well. And last but not least, Vital Energy. This is a $27 stock. It's gone up, it's been at 600 before, so the odds of this going to 270 if the company stays healthy, it looks like it's getting battered. Look at this insane selling. Definitely looks like it's with the Bears. Ooh, look at this though. Is this company in the US? Yeah. We might have some dislocation here. 2023, they did 1.5 billion. 2024, 1.84 billion. Already 2024 is looking good. The price to earnings on this is absolutely disgusting. Typically you look for a 15. This is at a 3. And the forward P is at a 2.96, which means this is a potential really good opportunity. We'll run through the whole gambit here. Gross margins 38%. Profit, they're profitable. Huge shorting. That does not look good. All right, let's look at this one because we may have found a needle in a stack of food made for horses. So market cap is 1 billion, 30 million. Income is positive 255 million, 800,000. Sales 1 billion, 840 million. Fantastic. Wow. Ooh, I see why they are way over leveraged. They are way over leveraged. If they close their doors tomorrow, they would not be able to pay off all their debts and notes. So this is where a huge risk reward comes in. Let's see what we're working with here. Okay, we want to look at a quarterly basis. Q1 this year they did 482 million. Q1 last year 332. That's a 150 million dollar positive increase. Q2 476 million this year. Q2 last year 335 million. That is a 141 million dollar increase quarter over quarter. But there's a but. They are paying about twice as much as they did. So their gross profit is about $4 to $5 million more overall. So we got a president and CEO buying $94,000 worth, respectable. The SVP sold 300,000. No real red flags here. Okay. They do have 56 million in cash. 56,560,000. Debt. Ooh, mamacita. 1,719,210,000. Let's examine. Total assets 5.2 billion, total liabilities 2.4 billion. So assets dwarf liabilities at least 2 to 1, which is great. That's what you want to see. Debt, they did have 2.1 billion in debt. They paid off about 440 million in debt. Good for them. That's a pretty big win, honestly, for them, because that kind of goes to show they can really tackle this debt. If they continue being that aggressive, they will have this debt paid off in 4 quarters, almost 4 quarters. Crazy. Okay, back up here. And we have shares outstanding of 35,410,000. That's a stock price of $41 and it's trading at 27. So not a huge dislocation like we saw with GameStop, where it was a $4 stock with a potential of 900 and whatever. But then again, with GameStop, we were only looking at face value up here. So if we change that and we take out the cash and the debt, that brings this stock to $88.27. Not quite the 20x that we saw with GameStop, but still, that's a pretty steep dislocation. And while that loads, I just want to see if I have charted this one before. I have not. But what I want to do, 692, 66. Ooh. Did it snap? Did it snap to it? Let's see. Yep, 66. Okay, so I wanted to look at our Fibonacci arcs because this typically tells us how well a stock will react. I think once VTLE exits this, we could see a potential move. Potentially. And I mean, look at the respect. From our all-time high to our all-time low. 10 out of 10 support, just touching this, great. 9.95 support there. 10 out of 10 support. Great test of resistance. Perfect test of support. 9.9 out of 10 tests. 10 out of 10 support. Perfect test. Perfect 10 out of 10 test. Come over here. Perfect support. Perfect resistance. I mean, I'm liking this one over the next year. Okay. Institutions own 66.9%. That is old data. New data shows that institutions actually own, drumroll, 86.56. And we have all-time high institutional buying. So we have almost a 20% increase in institutional ownership, which is pretty huge. We got our Vanguard. They increased their position earlier this year. BlackRock also increased their position. Richard Campbell also insanely increased his position. State Street decreased and Riverstone decreased as well. So VTLE, this is a potential diamond in the rough. So I showed you how to potentially look for naked shorts. And also, now that we have this saved, I can look at this on a Monday, a Tuesday, a Wednesday, a Thursday, see what type of potential dislocations in the stock market are. And this will probably show wonderful stocks that could be the next GameStop. So if you made it this far, thank you so much for watching. Hope you're doing well. See you soon.